Hello and welcome to our look at the Wednesday, August 20th trading session. I have the economic calendar in front of you, and as you can see, really not a whole lot to push the markets around for the Asian trading session and mainland Europe for that matter. So really, we think it's going to be a very technically related day. However, there are a couple markets that could be greatly affected by economic announcements. Bank of England minutes coming out, of course, is going to have an effect on the FTSE and the pound-dollar pair. Quite frankly, the pound is beaten up and the FTSE has gone quite a bit higher, probably on anticipation of quantitative easing coming out of the Bank of England. So that'll be interesting to see the reaction. As we go through the day, the Federal Reserve releases its minutes from the previous meeting, and we believe that more than likely this will affect the currency markets, could also affect the stock markets, but quite frankly, the stock markets are kind of on their own at the moment, so really don't look for too much there, and they need a pullback in the Americas, really. Crude oil inventories come out. Expect that to be a very localized number for the crude oil markets. We think that that market desperately needs some type of good news to bounce, but we're looking to sell those bounces. If we continue lower, that market probably goes to the 90 handle. Looking at the charts, you can see that the euro dollar fell during the course of the day. We are still above the 1.33 level though, and as a result, until we get below there, we really don't have much to do because that is so supportive. Looking at the pound dollar, you can see we absolutely fell apart during the session on Tuesday, and as a result, it appears that the market's going to go to the 1.65 handle. That is a much more supportive level on the longer term charts as far as we can tell, and as a result, we are definitely bearish of this pair. We think that the Bank of England, the announcement, the meeting minutes will have some effect on this, probably pushing this pair. We really don't see any reason for this pair to rise, and if it does, we would look at any bounce with significant suspicion. Over in the light sweet crude market, you can see that we have broken down again, and now we find ourselves just below the 95 level. The 95 level, of course, could be somewhat resistive on a bounce. If we get those inventory numbers in a little bit more withdrawn than anticipated, we could get a selling opportunity higher. Otherwise, we break below the lows. We don't see any reason why this market doesn't go looking for 92, as 92 is a much more significant support level. And then finally, looking at the S&P 500, very positive looking. We don't think the Fed minutes will have a lot to do with this market. It's just too bullish at this point. It's in its own world. That's fine, whatever. We like buying dips, but right now it is a little overbought. And with that, we've looked at the Wednesday, August 20th session.